Today I'm going to walk you guys through the process of finding the best concentrated liquidity pools in decentralized finance across various different platforms like Uniswap, Radium, Orca, and more. Now diving in, we're going to go ahead and launch the app and head right over to this Discover page. Because on the Discover page, this is where we're going to be analyzing different concentrated liquidity pools. And if you don't have the Pro version, you won't be able to select multiple networks at once, but that is okay. But specifically on this channel, I have a promo code that you guys can use to get 30 days free of Metrics Pro. So make sure you click the link in my description down below. Again, this offer is specifically in my description. It's usually $40 a month, but the link is going to get you 1 month free, which is great. But the first thing we're going to do as a liquidity provider is select our exchanges. So say we want to look at Uniswap, QuickSwap, PancakeSwap, and SushiSwap, you go ahead and select those. But for the sake of this video, I'm going to look at Uniswap, PancakeSwap, and Orca. Those are the three that I'm going to look at. And then as far as networks go, I'm going to do Ethereum, Arbitrum, Polygon, Base, BNB, then of course the Solana network. The reason why I select these is because Uniswap is very prominent on Ethereum, but also has some pretty strong dominance over on Arbitrum. Also, Uniswap does have a pretty large dominance on the Base network as well. It's the second largest decentralized exchange. And then PancakeSwap does have pools over on Ethereum, but PancakeSwap does have a very high dominance on BNB chain. And then of course, Orca is the largest DEX on Solana when it comes to concentrated liquidity specifically. Guys, I went ahead and put together a free guide that teaches you exactly what liquidity mining is. I'm going to leave that link right down below in the description, and all you have to do is type in your email and you can have access to it. It's going to tell you a bit more about myself and also how you can get started in liquidity mining. And then for calculation range, here at Build Your Wealth, we like to invest over a period of 30 days. So I'm going to have 30 days selected. You can change this as you like. So when it comes to your investment horizon, you should select it to the period that most suits you. So for example, if I want to be in a pool for about 30 days, I'm going to select a 30-day calculation range. However, if I want to be in it for only like 14, it might be a good idea to select like a 14 calculation range. And basically what calculation range does is it basically selects just how many days of volume, data, and fees to factor into your overall calculation when it comes down to this fees APR section right here. And remember, these are just estimates, but for example, you can see that here it's WETH to USDC has a 32.2% fees APR with a 14-day calculation range. And then when you change it to 30 days right here, you can see that it's at 52.93%. So it is a difference. So what does that tell us? That tells us that the yield in the last 14 days is lower simply because there's not as much volume as there was in the past 30-day calculation range. And we'll dive into the nitty-gritty of all this later on, but first let's start off with a couple different pools. So I'm going to use Ethereum to USDC, and that's going to be my Ethereum network pool. I also want to look at some stuff over on the Arbitrum network and the Base network and all those other exchanges that I selected. So for now, I'm going to uncheck Ethereum. So now I'm actually just going to check Solana and filter by TVL. Alright, so it looks like right now there's not too many opportunities that I'd be interested in. So what I'm going to go ahead and do is start to apply some different filters. So one thing I can do is go to pool and type in must include assets. So maybe I want to have Sol in a pool. And then maybe I want to look at stuff that has an APR higher than 50%. And remember, this fees APR here uses an average of plus 25%, minus 25% range basically. So do keep in mind that if you tighten up your range, you're going to get higher than this. And if you make your range less tight, you're going to get a lower fees APR. Remember, in no way am I a financial advisor. I'm just telling you what here at Metrics Finance and on this channel we do. And then for TVL wise, maybe I want to look at stuff that's like above $3 million. So here we go, 3 million. All right. And then if we want to do lower than a specific amount, we can do that, but I don't care to do that. Then the other thing you could look at is price volatility, but I'm not going to. So let's see. Right now, I'm going to take a look at Orca Sol. I'm going to go ahead and favorite this one right here. And then now if we go to favorited pools and remove all of our filters, we can see the things we had favorited. Okay, perfect. So now I can see WETH to USDC and the Orca to Sol. Another thing we can do is check out Ethereum to USDC on other networks because I don't know what the best possible return is. And as you probably know, Ethereum to USDC is not only going to be on Uniswap Ethereum network. It could be on Uniswap Arbitrum. It could be on PancakeSwap Ethereum, so on and so forth. So I'm going to go ahead and pull up the simulate page. This feature is pretty awesome. And then from there, I'm going to select this pair function. This pair function is our bread and butter basically. It's going to be what allows us to identify Ethereum to USDC or even Ethereum to USD opportunities on multiple networks and exchanges. So here we can select every single network and exchange or just the ones we want to use, which is what I'm going to do in this situation. So I'm going to select Uniswap, PancakeSwap, and Orca. So now I'm going to select a network. So I'm going to do Ethereum, Arbitrum, Polygon, Base, BNB, and Solana. So what this is going to do is analyze Ethereum to USDC across all these different networks. And it pulls the networks that all these assets are on and crunches the pairs together. And this is all using CoinGecko API. So let's go ahead and pull up CoinGecko. So as long as it's over on CoinGecko, then you can utilize this tool. Also, if you're learning something, make sure to subscribe and click the bell to turn on post notifications so you don't miss an upload about the possibilities of making passive income with decentralized finance. So I'm going to open up USDC over on CoinGecko and scroll down to where it says contract. So if you notice these three dots right here, this is where USDC is actually listed. So this is where Metrics Finance is pulling the data from, but occasionally there are going to be different derivatives of USDC that aren't the same USDC as native, but maybe they're like bridged USDC over on the Arbitrum network, like USDC.E for example. So going back to this, what I'm going to do is select Ethereum as well as USDC. So now just wait for it to load and it will pop up with all the different Ethereum to USDC opportunities. It's crazy. As you can see, there's already a lot of pools and we didn't even select every single network and exchange. So one thing we can do is check this similar assets slider. So that's not only going to show us the Ethereum to USDC, but it will show us Ethereum to USDC.E. It will show staked Ethereum paired with USDC and other derivatives that are whitelisted just like that. So this is exactly how we can find the best return for a specific pair. Now sometimes this will take a bit to load, just bear with it. So if we take a look at what we saw over on the Discover page for the 30-day calculation range, about 52 or 53% on average. But if we take a look at some of these other ones, we got 58% right here, 103%, 47%, let's see, 99%, scroll down, 50%, 51%. You can just keep scrolling and checking these out. And remember, there are risks associated with liquidity mining and all this concentrated liquidity investing, so make sure you understand your risks fully before you deploy any capital. And for example, over here we have 79%, well like 80% yearly APR, but keep in mind this has very low TVL compared to over here. Now look over here, we have WETH to USDC over on Uniswap and Polygon, and it says the yearly APR is 80%, but look, the TVL is pretty low compared to the others. It is only 243,000, so keep that in mind. Since the TVL is much lower, it means that it might not be as consistent. So if you keep scrolling down this list, we're going to continue to identify different opportunities. Now me personally, I would be most comfortable investing with the one that has the highest TVL, 427.35 million here, because I really enjoy consistency. And also a good thing about high TVL is that you can deploy high amounts of capital into these pools. So now I can go ahead and pull open the simulation page right here. I'm going to go ahead and do so, and you can choose your range here, min price, max price, and it will spit out the estimated yearly APR. So for example, if I were to change the range, maybe let's change the min price down a bit to like 2088, let's see, around 2165. Look, the APR went up to 67%. And you can also change your current price to get about 50-50 of each asset. So let's see here, let's get trying to get close as possible. Here we got 50% USDC and 50% ETH, give or take, and now it says yearly APR is 64%. So if we put in $100,000 would be making me roughly $176 per day estimated. Now a few considerations here. We always need to adjust the current price to make sure we're actually looking at a realistic return. If you adjust the price over here, it looks like we're getting a 76% APR. If you go down here, it shows 108% APR at sometimes. Well, what's the difference? There's more liquidity over here and less down here, as you can see. So also to take a look, you can also look at this volume history down here. And if you go ahead and change the calculation range, you can see a different volume history. So if I change it to 7, look, now we can see 7 days of volume. So if I set the calculation range to 7 days and set this as the current price right here, looks like we're getting a 35% yearly APR. So keep in mind, calculation range is what decides how many days are being factored into your calculation. So it seems realistic to only use the recent days of data, so we want to accommodate for that. So if you guys want me to do a deep dive on how you can actually find the ranges and calculate estimated returns and how you can use the simulate feature to build out your whole portfolio, make sure to subscribe, drop a like, and comment below.